if you start your videos, Mr. Hiren is already here, well on time. Namaste, Hiren bhai. We'll wait for 2 minutes. There are many people are joining. Am I audible to you all? And is music also audible? Please switch on your video cameras and show your face. Namaskar. Welcome to today's event in conversation with Mr. Hiren Ved. Let me take this privilege to introduce Mr. Ved. Mr. Hiren Ved is the co-founder, director, CEO, and CIO at Alchemy Capital Management. He started his equity market career in 1991 and worked on both sell side and buy side research roles. For the first 9 years of his career, before joining Alchemy to spearhead the firm's asset management business in the year 1999. Hiren has deep knowledge across sectors and is known for his bottom-up research and stock picking skills. He has built a long-term track record of generating significant alpha over the last 20 years, managing, advising funds over 800 million US dollars. As on 31st May 2022, across domestic and offshore mandates for Alchemy. Apart from this, I have been knowing Hiren personally from last 10 years or maybe more, and the reason has been yoga. I would love to mention here, he is the person who used to take yoga, breathwork, meditation lessons in his office cabin surrounded by different monitors, charts, and it continued for many years. He is an international marathoner too, presently preparing for Berlin Marathon. He is a sweet and humble person with a warm heart. He is always helpful, and I'm truly honored he was just a phone call away to guide us in today's event. Now, I would request Mr. Vinay Ambekar to take over. Vinayji, you can please unmute yourself and take over. Just before Vinayji takes over, a small request. Whenever you have questions, you please post them on the WhatsApp group. So we will read out on your behalf, either Mr. Vinay or me. So it will not create any chaos. All right? Is it okay? Yes, Vinayji, you can take over.
Good afternoon, Hiren sir. Uh, um, Thank you very much at the outset for spending your valuable time with us. We truly appreciate it. Like I said, we are all fans of you. We have watched your TV interviews, your press interactions with great interest. And we are truly humbled and honored that you have kindly directly today. Um, Sir, we are a group of value investors here. We started off being in Dubai and United Arab Emirates, and slowly it expanded by introduction of several new members from different parts of the world, India, Europe, Americas. We often meet, used to meet once a month here in Dubai to discuss different aspects of value investing. Not only value investing over a period of time, some very good members have got added to our group who are very good at reading charts and at analyzing stock movements also. So it's become a very cohesive and very um, interactive group in that sense. So just wanted to give a quick intro about our group as such. Sir, thank you again. What we would like to, what I would like to just mention to the audience once is that Hiren sir gave a fantastic, lengthy interview, which has been very well captured in one of the books, which is Masterclass with Super Investors. This was released sometime in 2018, and it captures in depth Hiren sir's journey, his thought process, his approach to investing, his success, his learnings. A lot of it has been captured very well there. So for truly understanding Hiren sir, I think that chapter of the book is a welcome read for all of us. Sir, like I said, like we don't want to trouble you with making a presentation. We want to have a freewheeling discussion about those aspects of investing, your journey, how you have navigated through difficult times. Because, like Sandeep Bhai said, you have been in the markets from prior to the dot-com boom and bust in the 90s, uh, uh, and then you have seen all the tough periods. You have worked closely with Rakesh Jhunjhunwala sir also. So, if you can share some elements of how he had a role to play in your investing career, some interesting anecdotes, some learnings that you would have. And sir, if you can juxtapose wherever you feel comfortable with stock examples of your career. So it will help us relate with our own examples and experiences so that we get more engaged with those elements. Just before I hand it over to Vivek sir, Hiren sir, I'm sorry. In the book, he has covered some very fantastic successes and journeys which he has had in companies like Bajaj Finance, Dynamatic Technologies, Praj Industries, TTK Prestige, VIP. He's also spoken about some of the misses that he had and the reasons behind those in stocks like Bharti and Page Industries, and also how he uh, some of these stocks were which served as good learnings, for example, Ramco systems or IMOS Spin. So I encourage people to read that book. So last, before I hand it over to you, sorry, is that that book was released sometime in 2018, and a lot of water has flown under the bridge since then. So if you can also relate the recent events that have happened, maybe post demonetization, around that 2017-18 time till now, we would appreciate it greatly, sir. So over to you, Hiren, sir. I think you have to unmute Sandeep bhai.
Yeah, okay. Well, at the outset, thank you so much. Thank you, Sandeep sir, for inviting me. Thank you, Vinay. He passed on the message, the very nice message that you had written, which he forwarded to me. And while I was reading the message that you had written, I was laughing to myself that even after hearing me on CNBC, if they still want to hear me, either they have a lot of time on their hands, or hopefully I'm saying something which is probably relevant. But before I start, I think that I presume, I'm not very sure, but that all of you also, or at least some of you, are participating in Sandeep sir's breathwork classes, which I have done. And while we are going to talk about money and markets and wealth, I think the real wealth is in the health, right? So give more importance to what Sandeep sir is saying and practice your breathing seriously. And then obviously everything else follows from there. Again, I mean, thanks all of you for taking time out. It's always a pleasure to share my experiences. I'm generally given more credit than I deserve, but hopefully, having been in the industry for almost 30 plus years, I am happy to share some of the insights and learnings that I have got over a period of time. How much time do we have, so that I am conscious of everybody's time, and I also want to make it a little more interactive rather than just me talking one way. So
We have decided about an hour.
Okay.
You can decide.
Okay, fair enough. So I think my journey in the stock market started at a very, very young age. As Vinay mentioned, if you read my book, I have described in great detail. But coming from a typical Kutchi Gujarati house where investing in the stock market runs in the blood, right? There are constant conversations that are happening in the background. My father talking to his cousins and some of his friends and advising them on investing. And he also used to take me to these annual shareholder meetings, right? Back then, 30 years ago, there was no conference calls, no analyst meets. Access to information was not that easy as it is available today in the electronic media. You virtually get everything electronically. You can read the transcripts of earnings calls. You can have access to as much information as you want. But in those good old days, we didn't have that benefit, and therefore the only way we could gather more information about a company that we were interested in by actually going and to the annual shareholder meeting, listening to the chairman or the managing director talk about the company and the future plans, And then immediately after the meeting was over, we would rush to the stage and, try to have a conversation and try to get as much information as possible, right? But all that is not relevant anymore. As I said, information is not an edge anymore. Back then, even having access to information was a significant edge. I think what you do with that information and how you build on that and what insights you draw from that is very, very important, right? And also, I am fairly lucky that not only did I start very early this journey, when I was still relatively young, 19, 20 years, but I also had the good fortune of working with some of the best minds in the business, starting with my first job at KR Choksi. Kisan Choksi is a very well-known value investor. He, even at this age, is very, very active. And I learned a lot from him. And then obviously working with my partners, Lashit and Ashwin, and also Rakesh Junjunwala, who's obviously very well known to all of you in the stock markets, and interacting with people like Ramesh Damani, Radhakishan Damani, I think, and many, many other investors, including some investors, from the US, which is the Mecca of investing, learned many things along the way. And I've tried to inculcate the best learnings from some of these investors into my investing framework, right? And all of you are obviously value investors. I must caution you that in the strictest sense of the word, I'm not a value investor. I am actually a growth investor, right? So I know these distinctions beyond a point don't matter, but the classical value investing as practiced by Ben Graham and Warren Buffett is very different from, the word value investing is used very loosely, right? But and I will also say, because this question is asked, that are you a value investor? And I say, no, I'm a growth investor. Most of my relatively good successes have been to find great growth companies. And in my experience, at least in the Indian market, what has really worked is growth with quality, obviously. And when I started, obviously, there was very much a lack of. So when you start out, you don't have much experience, but you have a lot of enthusiasm, right? There's a lot of excitement. There's a lot of enthusiasm. You want to quickly make money. You want every stock to be a multi-bagger. You don't want to do the most obvious things. So there is a lot of ego when you are younger. You want to find an original idea so that people say, "Arey, this guy has found this stock," and you don't want to do something which is staring in front of you, which is very obvious, right? But time, experience, and losses and disappointments taught you that this is not an intellectual exercise only, right? You do require some level of technical knowledge and understanding of financial statements and businesses, but this is not an act of intelligence. In my opinion, to be a successful investor, you just need to be a good human being first, right? You require a very high level of EQ, or what they call emotional quotient, because the act of investing is very human, right? I mean, you are taking decisions. You have to be in control of your emotions. There are a lot of adversities. A human mind is not very accustomed to saying that I have gone wrong. So you don't accept your mistakes. And because you don't accept your mistakes, you don't act accordingly, right? And therefore, I have learned that to be a very successful investor, you first need to have a very high emotional quotient, the ability to be patient, to think clearly, to think critically, to have the humility to accept that you can go wrong, to not be overconfident, to not get carried away by stock prices in either direction, and to be constantly learning, right? And even after being around for 30 plus years, I still, when I look back and say, uh, you know, could I have done something better? And the answer is always yes, right? Um, one of the things which at least I have found very, very useful, and every investor I would recommend in one way or the other to do, is to write down why you are buying the stock, right? In a few sentences. You don't have to write a big thesis, but it is very important for you to write down why you like a company and why you are buying it. Because that gives you clarity of mind, so that when you go back and let's say an event happens, something good or bad happens, you are able to go back and refer and say, this is why I bought. And is there any significant change from what I was thinking? And that should change my mind, right? The second thing is you should also reflect on your successes. So I'm sure a lot of you have done very well, have made money, picked good stocks, made a lot of wealth. I also reflect a lot on why did I make money in this company, right? And try to analyze what went right. Also, when I don't do well in an investment, it is very important to reflect what went wrong, right? And what could you have done better? Could you have thought about those things before, or no? Those were things that you couldn't predict. And therefore, it is the art of reflection, right, is very, very important, because there is a humongous amount of learning that you can do if you reflect upon your successes and failures. And one of my partners always used to say that if you don't know why you are making money in a stock, most likely you will end up losing money, right? So it is very important that you know why you are making money in a company, that it's not just momentum, it's not just luck, it's not a raging bull market where everybody thinks that, they are great stock pickers and great investors. And therefore, it is extremely important for you to reflect and understand that even if you are doing well in a stock, why you are doing well. You need to ask that question, because once we start making money, we are all very happy. We are so satisfied. We are proud. We want to talk about it to our friends. But you really need to converse with yourself, both on your successes and failures. At least I have found that extremely useful to be able to do that, right? Secondly, even during the journey of investing in a company, some doubt is very, very important. We try to simplify things in the investment world by saying conviction, right? I have a lot of conviction in this company, and therefore I'm going to hold on no matter hell or high water. At least I don't think that is always a very good thing. Yes, you need to have conviction, because without conviction, you can't make money. But it is also important that during the journey of holding a company for many, many years, there will be times when there has to be self-doubt. And it is like a survival mechanism, right? If God did not give us the ability to be fearful or careful, then we are likely to hurt ourselves very badly, right? And therefore, fear, doubt, all these are very, very important things. You cannot say that I will always be confident, because most likely it may turn out to be overconfidence, right? That doesn't mean that you have to act if you have some doubt, but you have to certainly think and reflect on it and keep checking your hypothesis, right? That this is why I bought the stock. Is it still relevant? What can go wrong? Has anything gone wrong? And therefore, some amount of self-doubt is equally important. Obviously, everybody wants to make great investments, but I just wrote down for this a few things that I thought were important, right? If you want to make big money in any investment, right, there are a few things that you need to get right. First, you genuinely need a very long-term horizon. I don't think anybody, I have not seen any successful investor make serious money in any company which they were not invested for a long period of time. Not one investor, right? And you can, whether it's Warren Buffett, whether it is Rakesh Jhunjhunwala or whoever it is, right? One of the things when I analyze their successes and I look at the stocks that they've made huge money on, there are a few things that obviously came in, which is that they all were invested in that company for a long period of time, because it takes time for companies to grow. And the external environment may or may not always be very favorable. There are times when the wind is behind you. If you are sailing, if the wind is against you, it becomes that much more difficult to move ahead. But when the wind is with you, then you can grow, you can sail even faster, right? So maturity takes time. Nothing happens overnight. And in fact, I would be very fearful, or I would be very careful rather, that's the better word, if I invest in something and suddenly I make a lot of money. And then I must ask myself a question: were you just plain lucky, or is it momentum? Or is it that you have just bought a very popular theme and the whole world is buying, and that is why you've made money? I would really ask myself a question, because at least in my career, I have never, ever been successful in an investment or made large amounts of money without being invested in it for a reasonably long period of time. Now, people ask me, what is a reasonably long period of time? Is it 1 year, 3 years? Well, I mean, it really depends. There is no right answer. But in my experience, long term means anything between 5 and 10 years, right? Nothing happens if you make money within a year, 2 years, consider yourself to be lucky. Yes, you do make money, but I'm talking about really big money. I'm talking about your stocks going up 10x, 20x, 50x, 100x, right? And in my career, I've been fortunate that I've been able to find at least one stock so far, which has been 125x since the time I bought it, which is Bajaj Finance, right? I first invested in it when the market cap was 1,400, 1,500 crores. And today it's 4 lakh crores, right? And it has taken a good 13 years of being invested in the company to get to that position. Now, every stock is not going to be 100x. But even if you make 10x in 10 years, that's not bad. Or 20x in 10 years, that's not bad, right? But I've had a few 30x, 40x stocks. But none of them has happened in 2 years or 3 years. It has taken 5, 7, 10 plus years to make that kind of serious money. So first thing, nothing happens. You need a long-term horizon. Second, obviously, you need the conviction to stay invested, right? And that's the difficult part, because there is a fine line between conviction and doubt, where it is quite possible that during the journey, things may not pan out, something may go wrong, either in the external environment, or the best of companies make mistakes. I mean, there are hardly any companies, in my view, which you can say never made an error, right? There are very, very, very few companies, right? Because the external environment is always very, very dynamic. And you must also understand that ultimately companies are run by human beings, and human beings can go wrong. And the best of managements have made the worst of mistakes. So there is nothing like, मैंने बोल दिया ना ये ही होगा. I am telling you this management cannot go wrong. There is nothing like that. You have to be constantly on the vigil, because the best of the best make mistakes, right? And leadership is something which is very difficult to keep. You know, you will find a lot of people like us going and boasting on TV that, you know, I'm buying a great franchise, I'm buying a great company, you know, this company has consistently delivered returns. But leadership is not constant. Leadership keeps changing. And the reason for that is it is not very easy to constantly adapt to change. And every few years, there are always new challengers that come in and challenge. I remember this very distinctly. I think it was in 2017 or 18, and Motilal Oswal had organized a conference. You know, a lot of these brokers organize conferences, and Aditya Puri was one of HDFC Bank was one of the keynote speakers. And somebody asked him a question that, who do you consider yourself as competition? And he said, frankly speaking, there is only one company, which is Bajaj Finance. And this coming from Aditya Puri, who ran one of the best banks, well-run banks, I would say, in the world, right? Where they consistently delivered 20% growth for years and years and years together. And he acknowledged, and he said that I fired my consumer retail lending head, that were we sleeping at the wheel, where this guy comes from nowhere, Bajaj Finance, and you know, they've become so successful. So leadership koi upar se likha ke nahi aata hai. No, but you know, it's not that because you are a leader today, you will remain a leader tomorrow, right? So you have to be constantly innovating and disrupting yourself. And no matter how good you are, at some point in time, you will falter, and you have to just be careful about that, right? But the second point, as I was saying, is that the conviction to stay is not something which will come easy. And it also comes over a period of time. So if you believe that you are going to study a company and you are going to build your conviction on day one, I think you are sadly mistaken, right? Because conviction has to be built over a period of time. And I usually give this analogy, right? That buying a relatively unknown company or a relatively young company and investing and building conviction is like hiring a new employee. So what do you do when you hire a new employee? You have the CV in front of you, right? So he has everything. He has his background, he has his educational background, he has all his experience, that he has worked in this company. This is the kind of work he did, all the awards that he has won, his personal interest. his achievements. It is like you or me reading the annual report of a company where all the information about the company is available or about the industry is available, right? So you try to understand the company in detail. You try to understand the nature of the business. You try to understand what are the success factors will drive. Similarly, when you get a CV, you try to understand that person. What are his strengths? What are his achievements? What is the character of a person? Then what do? You call that person for 1 or 2 interviews, maybe 2, 3 interviews, right? Because you now want to have a face-to-face interaction. You've read everything, but you still have more questions. So you ask him, okay, what did you do? How did you handle this situation? You want to get a better sense. That is like you and me going and talking to the CFO of a company or an MD of a company or an investor relations guy, and you're quizzing the management and asking them a lot of questions on the business, right? And then you think, okay, now I know much more than just reading about the company. Then if you see in the CV, generally you give references, right? So you want to talk to that person and say, okay, this guy worked with you earlier, or he was in school with you, or he was working in this company with you. What do you think of the guy? How reliable is he? How confident? What do you think his strengths? So you are doing a independent check on the person you want to hire by talking to some references, right? This is like you going and talking to a competitor or a customer or a supplier. You're trying to understand and cross-check a lot of things. So you're trying to do some kind of a due diligence, right? And then you say, okay, I know a lot about this guy. I think he seems to be a great guy. He fits into what I want in the organization. So you hire that person. Similarly, you think you've done all the research on a company. You've done your cross-check. You've done your due diligence. You've spoken to the management. Now you want to buy the stock and you think this is a great company. You want to invest in it. And that's it. But in my view, that's only 20% of the job done. The real fun starts after you've invested, right? Because then a lot of things happen. It's a real world. Things go according to you. Things don't go according to you. Who knew there is going to be a COVID-like crisis, right? And what will happen to the business? How will the management manage a crisis like that? All these were not known to you when you first invested in a company, right? So we as investors, we always invest in the realms of huge amount of uncertainty. We are always seeking certainty, but there is a limit to which you can seek certainty or visibility, as people call it. You are inherently, the act of investing is, yes, you need knowledge, you need understanding, but inherently it's an act of faith. It's an act of building conviction, and it's an act where there is going to be a lot of uncertainty in the future, which you cannot comprehend or predict today. So you hired this person, and then you will figure out that once that person is worked with you for 2 years, 3 years, you will know far more about that person than you knew when you interviewed that person. Do you agree with me or not? Right? Because then you see that person working day in and day out in every situation, in a tough situation, in a good situation, when a challenge is thrown to him or her, and how that person takes up that challenge. What does that person do in adversity? And then you know, this is the real strength of the guy whom I hired, or this is the weakness. Isko aisa kaam de sakte hain, isko ye kaam nahi de sakte, right? And that's why conviction also has to be built over a period of time. Now, I gave this example of COVID because it's a classical example. Nobody would have anticipated something like this, right? And therefore, a true character of a management and a true character of a business will only be known once you go through a crisis. It's like you say that unless the hot metal goes through, loha pigal ke strong hota hai. Similarly, management and companies, their character is defined how they do not during good times, but how they do during bad times, right? So, as you go along the way, after you've invested, you need the conviction to stay, because the more you learn about the company, the greater you will build a conviction. Third thing, to make big money, in my view, apart from having a very good understanding of the business and the risk and the drivers, either you need to be very early or you need to be a contrarian, right? If you are going with the flow, it's not that you can't make money. You can still compound your money, even if you buy a consensus great company. Like, for example, Asian Paints is a great company. I mean, one of the few companies, more or less, if you bought at any point in time and held it for a reasonably long period of time, you made some decent returns, right? But if you want to make great returns, then in my view, either you have to be very early or you have to be a contrarian, which means that you are going against the popular belief. Everybody says, when there is a lot of consensus and everybody is bullish about a company, unlikely that you will make significantly superior returns, because it's probably already priced in, right? But if you have a contrarian view, and I am not for even a moment saying that for every investment you have to be a contrarian, not necessary, right? If something is down in the dumps, there is a very good reason why it's not doing well. You need to ask that question, right? But I have seen, at least if I look at my successes and if I try to analyze why I made money, why I was so successful in that investment, broadly it fell into one of these two. Either I was very early, or my view was very different from somebody else, or a combination of both, right? And I'll tell you from my example, in when I bought Bajaj Finance, and people said, "Nahi, but why don't, matlab, retail lending to HDFC Bank bhi karta hai, Kotak Bank bhi karta hai. Why do you want to buy Bajaj Finance?" Right? And I said, well, because I think that they are going about their business very differently than what an HDFC Bank or a Kotak is doing. Their go-to-market strategy is very different. They were the first financial lender to have a person in every electronic store, right? They were the first ones to use a lot of data analytics to decide whether they should be giving you a loan or not. They were one of the first few companies that they could take a decision within 20 minutes whether you can get a loan inside an electronic store and walk away with the product with a zero EMI financing on the product, right? And if you look at the banks or the other models, their model was that, it would take at least 2-3 days to process a credit application. They were not directly sourcing the customers themselves. They had third-party people who were sourcing customers, and their go-to-market strategy was very, very different. You had DSAs, as they called, direct sales agents, who you would incentivize if they went and got you customers for small durables or products or whatever, right? And therefore, their go-to-market was very, very different than what a typical bank at that point in time. It was not that they were doing some rocket science, that consumer lending is something that only Bajaj discovered, but the way they went about their business was very different, right? Their go-to market and their customer acquisition and their ability to rely on data to give credit to the right people was way different than what anybody else was doing. And that's how they built their competitive advantage, right? So the understanding of the business is very important, but the big differentiator is that either you have to be very early or you need a very different view than what the normal consensus thinks about a business. But then if you look at, is that enough? I mean, again, I'm trying to simplify as much as possible within the given time. But I think that, again, if I look at things that have worked very well, there are, again, what kind of company you should invest in is, so one was the factors that I gave more from the point of view of the investor, that you need a long time horizon, you need to build conviction over a period of time, you need to be either early or contrarian, and you need a very good understanding of the business. Now, coming to the target, which is the company, what kind of attributes should that company have? You know, if you go back and look at the best performing stocks over 5 years, 10 years, 15 years, and if you analyze, you will find that there are certain attributes that each of these businesses had, right? The one, I mean, unless there were also other businesses where they were in very niche businesses, but by and large, if you're talking about creating multi-billion-dollar market caps, then obviously the absolute size of the market cap can only become big if the absolute size of the company is big. And the absolute size of the company can only become big if the market and the opportunity itself is significantly large. So if you are going to buy a great company, but where the market is relatively small, it's not that you can't make money, but at some point in time, growth will stall, right? Because the opportunity is not very big. So if you look at Infosys or HDFC Bank or Asian Paints or Bajaj Finance or Page Industries, right? A few things which were very important is that the opportunity set was very big. अगर आप छोटे swimming pool में swim करोगे, so obviously after a few laps you will come to the end, you will have to turn and you have to go back. But if you are swimming in the sea, you can go as long as you think you have the ability to swim, because the opportunity is so big for you to keep moving forward, right? So you need a huge market. Secondly, most of these companies typically tend to grow at least at the average growth rate of the industry or above, right? None of them have been great value creators if you are generally growing at a rate lower than the average growth rate of the industry. So most likely these companies are growing at an above average rate. Obviously, they have to be managed very well. So execution has to be high class. Then again, there are several ways. I don't have a single template to say this is how you can find out. But in my view, in our business, if a company continues to surprise investors for a reasonably long period of time, then you can be rest assured that you are on the right path, right? Because which means that the company is outdoing than what most people or the collective wisdom of the market can think it can do, right? So most of these companies have grown faster than average, and they continue to surprise on the upside, right? And third thing is that obviously they have very honest and clean managements, what you call governance. No company has made significant compounding returns if the management is a crook, because at some point in time, the crookedness will take the better of the company, right? So, and then one more factor which is very important, which I mentioned a little bit early, right? You need to have a simple framework to understand कि मैं जो business में invest कर रहा हूँ, उसमें अभी relative tailwinds है कि headwinds है. You may have a great company in a great management, but if the sector itself or that business is undergoing headwinds, unlikely that you will make money. It's like investing in the last 5 years in the automotive industry or auto ancillaries, right? The entire sector was in doldrums, or there were a lot of challenges that they faced. So then even if you bet on the best company, okay, maybe everybody else degrew or lost money, maybe you kind of didn't lose money. That's the best you can hope, right? But if you want to really make a lot of money, then at least you know that the sector doesn't have significant headwinds. Or if you still want to stay invested, and which is quite often in a 5-year, 7-year, 10-year journey, it's not necessary that all 10 years are very good for a sector or an industry. There are cycles within that. But then you should be very clear that unlikely that you will make a lot of money when there are headwinds, right? So for example, from 2012 to up until recently, no matter how good a capital goods company you would be, nobody made some real great money. The stocks didn't go anywhere. Now they're breaking out of 5-year, 7-year, 10-year highs, which means that the business is now moving to the next level. After a long period of consolidation, the sector has some tailwinds. So it's very important that you have an understanding of whether basically there are tailwinds in the sector or headwinds, right? And then accordingly manage the expectations of returns that you can make from that. So as I said, when you look at a company, few things are important: above average growth, better managed, especially during times of crisis and difficulty, right? So for example, in 2013, when short-term interest rates went up, when Raghuram Rajan pulled up short-term interest rate by 350 basis points, it was a very tough time for NBFCs because NBFCs don't have deposits. They borrow wholesale. And Bajaj Finance corrected 40%, right? I mean, in between, RBI changed the classification norms for loans, where instead of 120 days, if it is overdue, they said that you have to, if it's overdue for 60 days, then it becomes an NPA, right? So there are a lot of things in a journey of a business that will happen, and how managements react to each of these is very important. And again, no disrespect meant, but during that time, the M&M Financial Management said, when he was asked a question that, this is a draft paper by RBI, they are saying that they might move from 120 days to 90 days recognition. He said, "Jab aayega tab dekhenge." And what did Bajaj Finance do even before it became a policy by the RBI? They moved to 90-day recognition. So a leader, a great company, always follows best practices before it is forced to follow, right? So above average growth continues to surprise the markets, honest management, very well managed. Again, well managed can be interpreted that if it continues to grow profitably with decent returns on capital above the industry average, then which means they are doing something right to be able to do that. And then honest, clean management, right? And then I would say that, and then, as I said, whether the sector itself has tailwinds or headwinds, right? That's also equally important. And the last two, which I think that we cannot underestimate, is lots of luck. I mean, sometimes you just have to be lucky. And also, there are sometimes companies which are there at the right time at the right place, right? I mean, it happens to people in their careers also, right? You are just getting into a business at the right time at the right place, just when things are beginning to happen big time, and then magic happens, right? So we should not think that it is only our superior analysis of the business, but there is also a big role of luck and being there at the right time at the right place, which makes a lot of difference. So I think here I would like to stop here, because I think I've spoken a lot. And I will now open it up for any questions and answers that may be there and make it more interactive.
Yes.
All right.
Uh,
You can
yes,
start.
Sandeep bhai.
Yeah, you can speak first.
Thank you, Hiren sir. I mean, it's a very well thought out, very well laid down framework that you have given, and this is actually important for investors like us to be able to think through this. It's like not giving a fish, but teaching how to fish. So it's some points around that, sir. If I could just continue this conversation for a few more minutes. One, like you had said, that information asymmetry is now no longer a key because it is so publicly available. What you rightly said is how you analyze that information is becoming very important. And also you said that how behavioral aspect of that is also an important element, which is but today a lot of algorithms and all are kind of taking that bit away also. It's really the kind of insight that you bring to the information that seems to be a key here. What I wanted to ask, sir, in today's age where it is pretty clear quite fast, about the growth prospects of a company, the growth prospects of the industry. It is very easy to know whether a company is high ROC generating, good management. The issue is, sir, it gets priced in so fast. And you also mentioned that the stock can sometimes go up very quickly. How do you think about this situation? Maybe if you have some live examples in the recent past that you have gone through to be able to help us relate with this.
Yeah, so I mean, and that's why I mentioned, right, that because information asymmetry is not there, sometimes one competitive edge is that if you're early in a stock, right? I'll give you an example. So one of our, so for example, even in our organization, though we have active managers, people like me and some of my other colleagues who manage money actively, we also have a quant team which runs an algo-driven strategy, right? Because we realize that it is humanly impossible now, with so much of information available, to be able to actually even devote as much time and effort to go through that many that many pieces of information, right? I mean, during a quarterly result season, towards the end of that, you have like hundreds of companies simultaneously giving you results, right? I mean, how can you be on? I mean, it's humanly impossible to track so many companies, right? But so either you have to be early now, in terms of, because everything gets discounted very quickly, right? I think I do agree. I mean, it's a challenge that because there are so many smarter people today than 20, 30 years ago who are trying to do the same thing that I and you are talking about, right? So it's very competitive. But the thing about it is that it is not a sprint. Okay, so let's say a good result comes, the stock goes up 10%, maybe it goes up 20%, I don't know, right? And you feel that, oh, I've lost the opportunity to invest. I think either you have the conviction to even buy at a higher price, or you can say, I'll have the patience, because the markets always give chances, always, right? And it is in front of us, though you can say it is very different. But we looked at the chart of some of the best companies even globally, right? If you look at Alphabet, which was Google earlier, or a Microsoft, or an Amazon, I mean, in their long history, markets always gave you chances to buy into these companies. If you were not lucky enough to be early and be invested in it, right? So you got to be patient, like it is happening with the new age companies now, right? I mean, people were falling over each other to invest in Zomato at 100 and whatever, 120, 140. And today, you can buy the stock if you really had the conviction on the business. You can today buy the stock at 42 rupees, right? I'm not saying you should go and buy, but I'm just telling you that markets will give you opportunities, right? And you know, there is no such thing as ki main reh gaya. You know, it's not good to have FOMO in our industry, frankly. Secondly, and this was generally a question asked that, you know, if the business is growing fast and the ROC is great, let me give you an example. It happened very recently in Page itself, right? I mean, like 2 years ago, you know, there was, I think Louis Philippe came and said that, I mean, Aditya Birla Fashions came and said they are going to get into this business. And they also came in and they created some competition, plus they themselves had some problem with the dealerships for some time, and the stock didn't really correct it substantially, right? And it gave you an opportunity to buy. And today nobody talks about competition for jockey because all the competitors came, maybe they took a little bit of market share, but these guys genuinely ran a great business, and now the stock is back up into a new high, right? So the point I'm trying to make is that if you believe that, you know, you like the business, but you don't like the valuations right now, and it's run up too fast, too quickly, everything has got discounted very quickly, don't be worried. Markets will give you, my experience is that in 3 years, within a span of 3 years, markets will always give you a chance to come back. Now you got to decide that when that event happens, is that when the stock price has fallen, is it just because of the external risk, or that something really wrong has happened in the company and that's why the stock is now available at a cheaper price, right? I mean, that there is no formula to decide. You got to figure that out, but markets will always give you a chance, right? And in fact, I'm running a strategy. Again, I'm not marketing here, but this is just to call Alchemy Leaders of Tomorrow, right? And because a lot of my high net worth clients came and said, "Are yaar, you know, Hiren bhai, how do we participate in these new age companies? They are the future. They are growing much faster, but all the money is being made by the VCs and the private equity guys because they are so early and they invest. And by the time the IPO comes, it's at a very high valuation. So hum kab paisa banayenge is companies mein, right?" And I said, don't worry. The temple of capitalism, the stock market, the listed stock market is the temple of capitalism. Yahan sabko matha tekne aana padta hai, right? So you could do series A, B, C, D, E, F at whatever valuation you want to, right? So I consider that as like trying to be happy looking at an exotic animal in a zoo, because it's all a controlled environment. Few investors decide the next round of investing, right? वो आप पिंजरे में देख रहे हो फर्स्ट क्लास एनिमल को, but what happens once you get listed? Then you come in the jungle, and it is the survival of the fittest in the jungle, because the market will cut you down to size. Okay, so the correct price discovery will happen. So today there is price discovery happening in the market. Now, if you genuinely at that point in time, a year and a half ago, if you were so bullish on the business, then this is your time. This is your time to go and invest in those businesses, because the market is going to give you a chance, right? So yes, don't be too perturbed. Secondly, on valuations, so the classical history was that, right, HDFC Bank was never available at a cheap valuation. Valuation has to be looked in the context of the size of the business. अगर आपको लगता है कि there is a business which is today 500 crores in top line, but the PE is 50, so how can I invest? I'm a value investor. मैं तो invest नहीं कर पाऊंगा. My value investment principles won't allow me to invest. So fine, you can say I'll let go of this strategy. I don't have to buy at 50 PE. But if you genuinely believe that a 500 crore business can become a 5,000 crore business, it really has the scalability or the opportunity. That doesn't matter what you pay at what you pay in absolute valuations doesn't matter. So the point I'm trying to make, let's take an example. A business has a market cap of 3,000 crores or 4,000 crores, right? But it is trading at 40p, right? But if you believe that the business can have, with reasonable assumptions, if you believe this business can be a 30,000 crore market cap company 5-7 years down the line, how does it matter if you're buying it at 30 times today? Yeah, it will matter a lot if the company doesn't grow, right? Then you are stuck in an investment which you paid a very high value. So one of the two things can happen: either your returns will be more muted, or the company never grows, right? So you don't have to, as Rakesh ji says, you don't have to dance in every party. You choose the party that you want to dance in, right? So it's fine. There are so many listed companies. If you think you've lost one, there'll always be something else which will be available.
Sir, you mentioned in one of the recent interviews, you talked about how Tata Elxsi has done very well for you
Yes.
post-COVID. And you had also mentioned that it was, I think, you held it for a few years prior to COVID as well.
Yes.
In the journey of any company from 500 crores to 5,000 crores, there can always be periods where the company can falter. Earnings can falter, the stock price can stagnate. You probably have a period where you don't make any returns, or worse, you make negative returns. So can you give some examples where you had these kinds of fears and doubts that you spoke of, which is very important for a investor to have? And how did you think through those circumstances, and then it either worked for you, or in the end you said, no, it doesn't work for me?
So
sorry, sir. With full caveat and disclosure that any stocks that we talk about will not be considered as recommendations or otherwise. So, sir,
no, absolutely. So even if I'm only talking about these by virtue of an example, right? And in any manner, I think Tata Elxsi was very similar, actually, right? Actually, in my view, for me, Tata Elxsi is exactly the same framework as Bajaj Finance, right? I was early there in Bajaj Finance. There was only one other mutual fund which used to own Bajaj Finance, that was Reliance Mutual Fund, but they also got off at some point in time much earlier. And people had only questions about the business. कि ये तो छोटा loan देता है, 8 महीना 12 महीना में वापस repay होता है, तो for him to grow he has to give so many loans, right? So the same thing again, during Tata Elxsi, the same questions were asked that, these guys do small projects, unlike Infosys and TCS who do long annuity businesses. So there is visibility of growth. And then you get a new business, so that adds to an existing annuity, and that's how you keep compounding and growing, and which is actually right? But my view was that the kind of work that Elxsi is doing in the industry, it will start with small projects, but over time these will become big and strategic to the customers. And these are not skill sets which are very easily available. And with time, their base is still relatively small. So even if they get a few small projects, and if the size of the projects keeps becoming bigger over time, you'll be fine. But I agree. I had no idea that Tata Elxsi will grow the way they have grown and the stock will perform the way they have performed, because, we invested in it way back in 2014 or 15. And then pre-COVID, twice it corrected very sharply by 40-50%. And, there were problems because Brexit happened and JLR is their biggest customer. and JLR was like 25, 27, 28% of the revenue, and they cut back very strongly on R&D spending, and therefore they could not grow. And also the stock was not very well known and very well owned, and therefore at the first sign of trouble, people didn't know, so the stock really got, and it was not an easy period, frankly speaking. There was a lot of doubt. Am I buying the right company? Will this guy even grow? But as I said that, and I mean, it would be too textbookish to say that no, I bought it and then I didn't. So I did reduce my position when it didn't do well for quite some time, but I never got out of the stock completely. See, one of the things that I've learned is that you can reduce the amount of risk or the dollars that you are investing in a company or allocating to a company if you believe that somewhere your hypothesis is in doubt, and you wait till you believe that your hypothesis is likely to come back. And then, post-COVID, actually, I think it was the second or the third quarter numbers after in that COVID financial year, when I actually, and the stock was about 1,550 at that time. The COVID low was 500. So it has already gone up 3x. But I went all in at 1,550. I really bought aggressively at 1,550, right? So, but because I had followed the company so well, right, that I knew when that inflection point came, and I said, now this guy is out of trouble, right? Now I have a greater confidence in the fact that they will now grow and grow faster, right? And when that happens, so if either you stay invested, or you can even reduce at a point in time if you are doubtful. But when you think that confidence is coming back, and when you think the inflection point is coming back, you need to then press the accelerator, right? And I think that's what something I learned from RJ and all these great investors, right? It is called pyramiding, which is they usually used in trading, right? So you take a small trading position, and if it goes in your favor, then you pyramid up. If it goes in your favor, you pyramid even up, right? And then you really make a big killing, like how even Soros used to do, right? So you always average upwards, you don't average down. So you don't put more money in a losing trade. Now in investing, it could be different, but I'm just giving you an example. The point I was trying to make is that you may make a small investment and watch it and watch it and watch it until you think that you have the conviction. And when you get that conviction, you then have to put enough money behind that idea to make it big. Then you can't say, you know what, अभी तो भाव बहुत बढ़ गया है, अभी तो ये कोविड लो में 500 रुपया था, 1500 में मैं क्यों लूं? All those things don't work, boss. And today it's 8,500, right? It's the best performing software company. But to build that conviction, it took me many years to build that conviction. That's why I gave the analogy of hiring an employee, right? Sometimes to build conviction in a bit, and there will be a lot of people who will come and tell you, अरे इससे अच्छा तो ये कंपनी है, इसमें ये प्रॉब्लम है कि इसके छोटे छोटे प्रोजेक्ट हैं, इसको to grow will take a lot of time. And even today there are doubts, right? There were chip shortage in the automotive industry because obviously automotive is one of their big verticals, right? Auto is the most vulnerable industry to global macro shocks. And it's not that I don't worry about these things, even though if I can't be sitting on my laurels and saying, you know what, I have a great company, the stock is up from 500 to 8,500, so what, I'm absolutely right. I have to be on the edge, always questioning myself, what happens if there is a downturn and the automotive industry goes down? Will they cut spending? And if the growth goes down, then will the multiples sustain? Because it's not a cheap stock anymore. And it's very difficult to recommend somebody to buy it at 70, 80 times earnings, right? But I got here not today. I've been at it for a couple of years now, right? So there is no such thing in the formula ki tum dat ke baithe raho, ki stock इतना कन्विक्शन था हिरेन भाई का कि उसने बेचा ही नहीं, ऐसा कुछ नहीं है. मैं इस जर्नी में शायद 2 बार लूं, थोड़ा बेच भी दूं और वापस ले लूं. All this is very real. It happens, right? In fact, I was laughing at my when I was reading what you had written, right? That through the global financial crisis, how did you sit? And I was laughing to myself कि in hindsight, I can always say, अरे boss क्या conviction था, share लेके बैठ गए. And I was laughing to myself कि अगर बिकता तो मैं बेच देता, लेकिन बिकता ही नहीं था GFC में share. I just couldn't sell those shares, right? So I had no choice but to hold them. And then you make a virtue out of the fact that you became a long-term investor, right? So all this is all very wrong. It doesn't happen in real life. अगर बिकता तो मैं बेच देता, right? क्योंकि मुझे भी डर लगा था उस टाइम. मैं कोई ऊपर से नहीं आया था कि I could understand कि GFC में फिर 2009 में market rebound हो जाएगा and my stock will come back, because you are fearful. I mean, you are genuinely fearful. But the fact of the matter was that I could sell my if I wanted, I could sell my large cap stocks. But what do I do about my mid cap investments? वो तो बिके ही नहीं कोई इस market में. So you just became a long-term investor not out of choice, out of compulsion. So I don't want to make a virtue out of it, right? So it is all real, boss. You feel afraid, you want to sell, you want to reduce your risk, but if you really want to make big money, you have to be at it. And when you believe that the risk reward is in your favor, then you listen to no one. Right. And I say this, I say this because it's very important. At least I have found it very difficult to make a big allocation to any company based on somebody else's conviction. You have to build your own conviction, because I can tell you a stock today, but if you don't build a conviction at the first sign of trouble, you won't be able to hold the stock, because you have not internalized that company. It has not come with your own conviction. मैं कुछ भी बोल दूं आपको, आप बोलोगे हिरेन भाई तो बहुत अच्छा स्टॉक पिकर है, उन्होंने बोल दिया मैंने ले लिया, right? But if you don't have your conviction, because it has happened so many times, when I go back and tell my friend, मैंने तेको बोला था ये स्टॉक लिया तूने, तो बोला हाँ लिया, लेकिन 1000 रुपया बढ़ा तो मैंने बेच दिया, right? Or if it went down, then he couldn't bear with the volatility and he said I sold. So you can't make big money on borrowed conviction. You have to build your own conviction, and everybody has to build their own framework. You can learn from other people, right? You can learn and adapt, but you have to create your own framework and you have to build your own conviction.
Absolutely right. So just one last point from my side before we invite the audience for some time. I hope you have a little bit of time, sir.
Yeah, sure.
Sir, I mean, you have not been averse to allocation, because I read that at some point of time, Bajaj Finance had become 40% of one of your funds, and it was 25% of one of the other funds as well. So you're not somebody who probably gets deterred just because of size. Sir, can you just throw some light on how different is managing other people's money versus managing our own money? Because most of us here are individual investors who are making investments in our own names and managing our own money. And some thoughts around allocation. How do you think about allocation?
You guys are lucky.
Concentration and diversification.
You don't have to answer to anybody, right?
Seriously.
So when people ask RJ, he says, "Boss, I have no client other than my wife, right? I have to whom I have to answer." But yeah, I mean, so basically it's like this, and I have faced it practically, right? So till the stock keeps going up, nobody asks you a question. They say Hiren bhai is great, Bajaj fine. I have had clients when I was trimming from 40% and the stock was still doing well. I have had clients call up and say, please put a fucking freeze on my stock. Don't sell.
Don't sell.
Don't sell. Right? But in COVID, when it went down to 1700, the same guy will turn around and says, what's your risk management policy at Alchemy? Right? And he's not wrong, because, you know, when on large amounts of money, when your stock goes down by 30, 50, 60, 70%, you see money evaporating every day. Every day the stock keeps going down. Every day money is evaporating. Then the same guy turns around and tells you that, you know, why didn't you sell a little bit? Hiren bhai, and you know, they're all nice. So they'll say, Hiren bhai, thoda upar mein bechte the, आधा quantity bhi. तो अपन ऐसे टाइम में वापस ले सकते हैं. I said, you know, unfortunately, you've not given God to to run your money, right? So I think, I mean, see, I learned this from many of the very successful investors, that ऐसा कोई textbook में लिखा नहीं है कि this should be only 10% or 20% or whatever, right? It has grown. So as people say, you let your winners run and you cut your losers. People do the opposite. They keep cutting their winners and they keep their losers with them and keep averaging down. Right? You have to do the exact opposite of that. You let your, even if you don't buy, that's fine, but let your winners run. Because, and it really, so I always tell people, my greatness was not about identifying Bajaj Finance at a 1400 crore market cap. But I think it required some conviction to keep holding the stock and not booking profits for many, many years until it became a huge overweight position, right? So I think when I'm managing other people's money, I am in a fiduciary capacity. And, you know, I can't take the kind of calls that an individual investor can do for himself. But when I look at the best and the most successful investors, the 80-20 rule applies. It's called the Pareto principle, right? That, and I actually started a PMS strategy, which was very unique in the industry, where I said, I will only invest in 8 or 10 companies. Because if you look at Radhakishanji, Rakeshji, you know, today, how big is Apple in the Berkshire Hathaway portfolio? It's 40%, right? वो trim नहीं करता है 40 का 38 फिर 35. Either he'll sell if he has no conviction, right? Or if he has a better opportunity, then he will harvest some and then invest somewhere, right? So if you are managing your own money, how does it matter? I tell entrepreneurs, you know, who are also many of my clients, I said, all your wealth is locked in one company, my friend, one company. I have so many people who have ESOPs. He'll come with my portfolio, sir, ये मेरा portfolio है. आप देखोगे 80% Infosys है और 20%, then there are 25 other companies, right? So I said, you made all your money in your life in only one company. What bullshit of concentration risk are you talking about? You know, this is what an RM or a bank manager will tell you because he wants some money. So he will say, sir, आपका 80% एक ही company में है, थोड़ा सा diversify करो, आप बेच दो, ये product में डालो, ये mutual fund में डालो, हिरेन भाई को दो, ये करो, वो करो. I used to tell them on their face, is all bullshit. If you believe that Infosys can keep making money for you, why the hell you want to sell? So again, it really depends on, and you know, again, I mean, I always tell a lot of investors, right? Why are you investing? You're investing to make money, to be this thing. But if you're not going to be able to sleep at night, then don't do it. No? If you're going to second guess yourself, if any stock becomes 40, 50, 60% of your portfolio. So as a professional investor, it's difficult beyond the point to have a level of concentration, though I believe that I'm one of those few people who run with the largest concentration of stocks in the portfolio. because I genuinely believe that you need to keep your winners and cut your losers.
Right, sir. Thank you for that, sir. Sandeep bhai, we can open up the floor for questions.
Yeah, but there was a question from Mr. Debashish, but I cannot see him anywhere. Okay, guys, if you have any question, please raise your hand up, unmute yourself, and you can ask. I have a small question. Nowadays, we hear this tagline. Actually, I have started taking interest in market after lockdown. Let me tell you guys, when I was teaching him, I was never interested in market. I was teaching Lashit also, and I was teaching there are many other brokers. अपना काम नहीं है वो. But then lockdown happened and I started reading about market, started taking interest, joined this group and learning to understand charts, etc. in those 2 years of lockdown. But time pass के लिए कुछ नहीं था ना. There is a tagline now, ये market सबका है boss. And I'm sure you must be getting now a lot of investors. Hiren bhai, ये मेरा पैसा invest करो. Hiren bhai, ये मेरा पैसा. What is your take on this? What is the response these days from Indian youngsters or mutual fund? Actually, one point Lashit bhai told me that Alchemy is going to come up with mutual funds. I said I'm waiting for it. So can you just throw some light on this?
Yeah, I think so. As you said, that the equity culture has really proliferated, especially after the COVID crisis, because people had a lot of time on their hands. They started to look at their portfolios, they started to look at their finances, they started to figure out what was happening. And many people have now started to directly invest in the markets, right? Which is a good trend, so to speak. But I think as things open up after COVID and people go back and become busy in their businesses, investing is not a part-time job, let me tell you. It is a full-time job. You have to give a lot of time. You have to read a lot. You have to analyze so many companies. You have to sit and reflect, as I said. So it's not that, it's as simple as saying कि मैंने खरीद लिया, अच्छा कंपनी है और ये तो बढ़ने ही वाला है. ऐसा कहीं पे भी लिखा नहीं है, because the best of the best companies, if you buy them in the wrong cycle, have given no returns for 8-10 years together, right? So it's not as simple as it is made out to be. But I think a lot of youngsters now are coming to the markets. There is a lot of vehicles available, and I think the reason why we are going into the mutual fund industry is because we think that now truly every nook and corner in India, people want to invest. I genuinely believe that the next 10 years belong to India. And the expertise, the experience, whatever that we've built in the last 20 years to make money for relatively richer people, I think the same skill set we want to take to, mutual fund is a vehicle where people can even invest 500 rupees or 5,000 rupees. They don't have to invest 50 lakhs or 5 crores with us. But a lot of people, when they come to me and ask me, I always tell them that don't make this as your source of income. This is not your source of income. You cannot live off this money, because if you do that, then you will make mistakes, right? Then fear, greed, all of that will get the better of you. This is a place to make wealth, not income. For income, you should do something else.
Okay. Mr. Kuntal, I think you can unmute yourself and you can ask your question.
Thank you, Hiren bhai, for making particularly those videos, monthly videos that you make. It's very helpful to give a general direction of market and sectors and even companies. My question, I'll state the question first, is for an individual investor, what's your view on a basket approach versus individual companies? For example, you have mentioned in your interview, you are very much in favor of the ER&D IT companies. They have a long tailwind. So, and you have also mentioned you have owned, the company has owned LTTS also, LXC also, even KPIT and probably LTI also. So yeah, the question is in the basket approach versus individual companies for retail investors. Thank you.
So, good question, right? So when you have an early trend in a sector and where leadership is not clearly yet established because it's a young industry, a basket approach may not be a bad idea at all, right? Because you don't know, and especially individual investors cannot make a difference ki LXC mein or KPIT or LTTS mein kya difference hai. They are all ER&D companies, but each has their own strengths and weaknesses, right? And in such cases, it is probably good enough to, so any industry or trend or theme which is relatively young but promising, it is good to invest in a basket because it reduces your risk. It also increases your probability that you don't end up, you may get the sector right, but you may end up getting, if you are investing on one company, you may get end up getting the wrong one, right? Because either something happens or there is something very specifically wrong with that company or management or whatever, and it's not able to take the best advantage of the opportunity. But over time, as the industry becomes a little bit adolescent plus, right? Young, not very old and mature, but relatively young, but not very young, like a child. Then over time, leadership, there is more understanding and information available, then you can reduce your choices from 3-4 companies to maybe 1 or 2 companies.
Thank you for that. Thank you.
Thank you, sir. We are reaching almost to the end, but how can we let you go without asking your views on some macro related points? Some members of our group want to know how you're thinking about the impact on emerging markets due to the Fed balance sheet reduction, and related, around that, in that period, how do you manage emotions also, because this is going to lead to very volatile times. So how do you manage FOMO and fear during such times?
See, I always tell people that you will not be able to predict with any great amount of certainty either any risk or any macroeconomic shifts. If you just go back and look at the last 12 months itself, right? We have moved from transitory inflation to very high inflation, to the Fed becoming very hawkish and raising rates and reducing balance sheet size, to now becoming somewhat less hawkish, and the US bond market's talking about 2 rate cuts in 2023. You can't make a long-term investment if the macro narrative keeps shifting every quarter, right? You have only 2 friends in this kind of an environment, or even going forward, because as you said, volatility is part of this market. You cannot take volatility or uncertainty out of the market. I tell people, अगर बंदर है तो वो फ्लिप मारेगा, और अगर हाथी है तो उसकी चाल अलग है, बंदर की चाल अलग है. You can't say that the बंदर हाथी की तरह steadily चलेगा. ऐसा नहीं हो सकता है. बंदर की तरह ही चलता है. Markets will always be uncertain and volatile. You have only 2 friends: time. So if you have a long-term view, and secondly, the quality, underlying quality of the companies that you invest in. That's your best insurance. आप insurance क्यों लेते हो? Because of some eventuality. Your best insurance is that if you are buying a good quality company, I have never seen ever, unless obviously that event is such that it changes the potential of that business dramatically. Otherwise, a good business with very good return ratios, cash flows, profitability, whatever, will always bounce back, right? So you will not be, so stop wasting time trying to predict the Fed balance sheet reduce karega to kya hoga. Until 1 month ago, or even 1.5 months ago, किसी के मुंह में से आवाज नहीं निकल with the way the stocks fell, right? And today we have seen a massive reversal. Every chartist, sorry if some of you are here, I mean no disrespect, but At 15,000, I remember very distinctly, at 15,500, lot of the clients said, हाँ पैसा दूंगा, मैं चेक तैयार रखा है हिरेन भाई, लेकिन मुझे एक बार लगता है 14,500 आने वाला है. And I was so sure, believe you me, I invested all the cash in my client accounts because every single person said कि नहीं, मतलब markets are never this perfect. कि मैं 15-16 हजार पे हूँ, 15,700-800 पे हूँ, 15,500 पे हूँ, ये एक बार 14,200 आएगा, फिर मैं सब पैसा इन्वेस्ट कर दूंगा, उसके बाद मार्केट ऊपर जाएगा और मैं जग जीत जाऊंगा. It's not that easy in life, my friend. And I actually did that at 15,500 at those levels 2-3 weeks ago. Whatever cash I had created, I put everything into the market. Because at least that much 30 years of understanding of cycles and behavior should teach me कि ये मतलब, it's not that I could have been wrong also. मैं नहीं बोल रहा हूँ 14,500 नहीं जा सकता था, या अभी भी नहीं जा.
Markets can turn from now back.
Sorry,
anything can happen. I was just saying that markets can turn from now and go back down.
Yeah, it can go back. There is no sure, right? But again, I mean, I think that, okay, this is personally my view. I think that beyond a point, the Fed will not be able to shrink the size of the balance sheet. If you go back during the global financial crisis, they expanded the balance sheet. They contracted it little bit, and by the time they contracted it a little bit, the growth slowdown had started and they stopped, and then liquidity remained at 4 trillion. And then now they've expanded it to 9 trillion. Maybe they'll go from 9 to 8 trillion. And by that time happens, Europe will go into a recession, US will have a slowdown, and they will have a second thoughts and they will stop at it. Again, this is, but let's say that they genuinely try to reduce the balance sheet size significantly. Then obviously we've seen one thing that, companies which have a lot of leverage, or companies, I mean, then the market becomes narrow, right? And money gravitates towards the best of the best companies. And maybe for some period of time, there will be a big risk off. But personally, I see a low probability, though not a zero probability of that event.
So then all this just end then. How do we structure our mind to synthesize all this information? I mean, how do you think, because there's so many moving parts, so many variables.
Meditate
for
every day.
individual investors, sorry?
Meditate every day. Okay, go ahead.
So how do you train the mind to, distinguish maybe between noise, what is noise and what is actual information? Can you just give some pointers around that?
So again, I cannot give you, because I was telling them. So every variable, so the stock market, lot of variables impact the stock market, from politics to geopolitics to global macro to local macro, right? Now it is, as I said, humanly impossible to analyze and understand the impact of every variable on what's going to happen. Because the skill is that at some point, if let's say hypothetically there are 50 variables which impact the market, right? But all 50 don't have the same impact at a point in time. At every point in time, there are some different variables which have a greater impact on the market than anything else. But I can give you one simple thing, right? There are times in the market where the market actually moves because of just one variable, right? During European crisis, everybody was thinking कि European Greece का yield क्या है, and then the market would go up or down, it would open up or down. Always remember, when the market movement goes down to as narrow as one variable, it cannot last for too long. That correlation after a point in time breaks. So let's say tomorrow if oil prices go to $130, your market will only track oil prices. If let's say in India, the currency goes for a toss and it goes to 84, 85, whatever, then every day depending on what the currency opens, the market will open. But this cannot last for too long, because then something gives way, right? So whenever there is a risk, see, when people say inflation, interest rate, I don't consider them risk at all now. Because ye kab se apan sun rahe hain? Markets are not so stupid. They price in things very quickly. So the real risk is what I and you are not talking about today. Not what is being talked on CNBC every day. Even the pan wala knew 75 basis point hike karne wala. So how can the markets be impacted? No, I mean, I was absolutely sure that the market's going to go up after the event. Because it's all discussed.
This could be a little oxymoronish, but then what are those risks that you think that nobody's talking of, which could become material? Any?
See, I personally feel inflation is history, in the sense that, most commodities have rolled over. But for any reason, if oil goes back above $120 or commodities start to harden again, then I think these guys will be forced to really tighten, because it's politically very difficult for any government to allow inflation to be in a runaway. And see, India, it's not the problem in India, it's the problem in the average inflation in US is 2%. They're experiencing 8% inflation. They've never seen something like this. India has always seen 6-7% inflation. तो जहां पे 5-6% inflation है, अगर 7% होता है तो कोई जमीन आसमान नहीं हिल गया. We are not experiencing 20% inflation when average inflation is 6%. Then we have a problem at our hand. If inflation in India goes to 20%, that's the only reason Mr. Modi can fail. Otherwise, there is no way anybody can defeat him. You understand? So I think that all this macro bullshit is overdone. Even this recession, I was very clear कि कोई मतलब recession आया नहीं, उसके पहले price कर दिया. अब आ भी जाए तो क्या फर्क पड़ता है?
Very true, very true, very true. Yeah, thank you, really, Hiren sir. This has been a wonderful session, very enlightening. We've covered a range of topics, and I think each one of us would have very, very important takeaways from this, probably many unique to ourselves as well. And thank you for covering such a broad spectrum in such wonderful manner. Sandeep bhai, thank you very much, because
thank you so much, and happy investing, and don't worry too much. Have confidence and invest.
And thank you, Sandeep bhai, for arranging this.
The session is ending here. Thanking Hiren bhai for coming and showing us. Bhagwan Sri Krishna has shown 4 yogas in Bhagavad Gita: Karma Yoga, Bhakti Yoga, Jnana Yoga, and Raja Yoga. Hiren bhai has taught us today Artha Yoga. Artha Yoga is very important, right? So think about
very
it.
Well said.
And don't go to sleep with all these thoughts. Your sleep is extremely important. Without sleep, you cannot create health. And I think without health, you cannot create wealth. And what is the use of wealth, basically, if you are not healthy? What are you going to do, right? So thank you for joining this session.
Thanks, everybody.
Thank you very much.
See you tomorrow.
Bye-bye.
In future. Bye. Have a nice day.
Thank you.
Thank you.
Bye.